Bitcoin and the broader cryptocurrency market is still showing considerable weakness, closing yet another daily candle underneath the 112,000 level. As a consequence to the rejection from 112,000, the current downtrend is very much still intact. In today's video, we are going to be discussing the daily 34.34 on the RSI and the weekly 62.09, both hinting towards continuations toward the downside. We are going to be discussing max bearish targets, short-term potential relief rallies, and exactly what the buyers need to do to fully recover this downtrend. We'll also be going over the broader cryptocurrency markets, discussing the total cryptocurrency market cap and the altcoin market cap in today's video. Will Bitcoin continue lower, or are the buyers going to get back in control? That is the overarching topic of today's analysis. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin by clicking this name, checking out a 54+ month trading track record, or watching a 10-minute video inside the channel. You'll get access to two channels: the main trading channel, where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to a variety of group chats, from the general chat to the trading chart education chat to the news, the help, the daily video, community setup chat, and indicator/coding chat. Check it out and let's jump on in. So, jumping into Bitcoin's price action, we have just seen yet another daily candle close, confirming the rejection on the daily from that change of character level, that range low, that horizontal consolidation low at 112,000. We know this is the level of which we need to break back above and close back above to signify potential deviation from the range and the buyers being able to step back in. While we sustain underneath this 112 level, the risk of further continuations back downwards are still very much in play. We are going to be discussing all of that in today's video. We can also see on the daily chart, the RSI is approaching a very important level, which is the 34.34, a level which historically has resulted in flash corrections for Bitcoin when broken. Of course, while we remain under 112, there is a risk we do see that level broken again, so we'll be discussing that in today's video. Moving over to the weekly, we're going to be taking a look at the weekly chart, having closed that weekly candle below, and of course resulting in the 62.09 loss. We have seen a total correction of around 4% since the breakdown of the 62.09. We'll be discussing what this means and where Bitcoin is likely to move to. We'll also be taking a look at the total market cap and the altcoin market cap in the video. Let's start on the market data. 24-hour volume is down 2.9%, still sitting relatively high at 352 billion, with liquidations down 24% at 260 million, 150 million coming from longs, 106 million coming from short. So pretty much cut down the middle there, not heavily skewed in either direction, signifying that over the past 24 hours, we have seen mostly some sideways chop, which we can see here, a slight sideways but slightly upward chop into that $112,000 region. Moving over to the broader markets, the DXY is still holding above that weekly uptrend, watching to see how that does develop. We do have some important economic news events coming up, such as inflation data, and of course, the upcoming month we will have another interest rate release, and of course, depending on how that does develop, will massively determine where the DXY is likely to move towards. The overall assumption at the moment is while we hold the uptrend, there is chances we bounce back to 100, but provided we remain below 100, The expectation is that we eventually move to 92 to 93, which is going to be, of course, likely triggered by a reduction in interest rates. Moving over to the S&P 500, the S&P 500 has come back to retest the daily range high at 6,500, as you know already, and as I've been saying for the last couple videos. At the moment, while we remain below 6,500, I am taking a short-term bearish stance. If we break through 6,500, I will then expect the next leg upwards. We are watching for psychological levels, so whole numbers, 6,600, etc. But while we remain below 6,500, we can see momentum is downtrending, so we do run the risk of exhausting up over here. But for the sellers to really take control, we need to break this overall diagonal uptrend. You can see the diagonal uptrend spanning back from around 5,700 back at the beginning of May. Again, retesting that just a few days ago upon the interest rate news. We can see this uptrend is, of course, a representation of the trajectory of the price action. So provided we sustain above this uptrend, inevitably we will be breaking through that local high, triggering the next leg up. But if we do not break through its local high, we will be losing this uptrend, which should reverse the trend toward the downside, looking for corrections to 6,250. And of course, this acts as a major point of support. If we lose 6,250, we could see corrections as low as 5,800 to retest that sell side liquidity. Again, watching to see how the S&P 500 develops here. We are coming towards the apex. An apex is simply a point where the uptrend is converging with a horizontal level. So we're coming towards a decision zone. And of course, we can see momentum is still dropping. So we need to see the S&P 500 break this local high to continue upwards. Until then, the risk of corrections are very much present. And I think that is the overall overarching narrative for all the markets right now. The markets are looking good on the macro, but on the short term, we do have risks of pullback, such as, of course, the S&P 500 here and Bitcoin, of course, we've discussed already. So let's jump into the crux of today's analysis, guys. Before we get into it, make sure to go ahead and sign up to BitGet, BitUnix, and BingX. These are the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll go to support me making this content on a daily basis. And of course, you'll support yourself in your trading journey, getting access to that lifetime trading fee discount. And of course, all the exclusive campaigns we run on this channel. Check it out. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get back into it. Starting on the total cryptocurrency market cap and the altcoin market. We can see here the total cryptocurrency market cap on the left has been showing a little bit of weakness over the past 3 weeks, with that $3.95 trillion level still holding as a major point of resistance. And not only a major point of resistance, but it is acting as a trigger point which we need to break through to confirm the next leg toward the upside. And while Bitcoin is remaining under 112,000, the likelihood that the total market cap moves dramatically upwards is very low. For that to occur, we would need to see a significant drop in Bitcoin dominance, and we do not anticipate that happening to the extent of which it will need to happen to facilitate the total market cap rising, with Bitcoin remaining where it is. So for the total cryptocurrency market cap to continue upwards over here, we will as well need to see Bitcoin recover into this channel again and push likely back up into 116. We'll discuss that in the video today, but again, while we remain under 112, the probabilities are still in favor of this continuations downwards. Let's discuss that later on, but let's jump back to the total market cap. So as we can see here, the level we are watching on the total market cap is going to be this uptrend, this diagonal uptrend, our horizontal level at 3.65, and the uptrend on the RSI. So what are we seeing right here? We are seeing, of course, rejections with large wicks representing liquidations, generally the start of reversal patterns. We are seeing a weakening positive momentum print on the market cipher B, and with that weakening positive momentum, it is spilling over into the RSI, breaking the respective uptrend, representing a negative momentum shift. What does that tell us? It means that the momentum, or another word for strength, in the uptrend spanning back from these lows at 2.3 trillion is finally shifting in favor of the sellers, meaning the sellers are jumping in control and the buyers are losing steam. Now, they have not done so yet. They have not regained control of the trend. The buyers are still in control of the trend, but we are seeing a shift. We are seeing the weakening occur, and of course, we need to wait to see how this weekly candle closes to confirm a negative momentum shift, because the breakdown in the RSI is based on closing prices of the candle. So we need to see how that price closes in 4 days to validate whether or not the negative momentum shift has occurred. At the moment, we are just running the risk of that negative momentum shift. In terms of the horizontal levels, while the total market cap remains above 3.65 trillion, we are technically above the weekly range high, and this could result in continuations upwards. If we lose the weekly range high, that will mark this as deviation. We will see corrections downwards for the total market cap, our targets being two levels. Number one, the break of structure at 3.5 trillion on the dot, and number two, the sell side liquidity at 3.05 trillion to 3 trillion on the dot right over here. Again, for these targets to be reached, we need to see momentum continue to shift negative. We need to see the diagonal uptrend broken, and for that to happen, we need to see Bitcoin continue downward, meaning we are not able to reclaim these range lows, which we'll discuss in a second. Let's move over to the altcoin market cap. Now, as we know, the altcoin market cap has been holding very well in comparison to the rest of the market. Again, primarily as a result of Bitcoin dominance dropping. And of course, this is just an indication of sentiment in the market. When we see Bitcoin dominance drop, it is generally an indication there is more optimism in the market, there is more hope, there is more potential for more speculative environments. And we see these speculative assets such as Ethereum, which is a little bit more speculative than Bitcoin, but mostly altcoins in general perform a little bit better than their Bitcoin pairs, resulting in Bitcoin dominance dropping as money rotates into altcoins. And of course, that facilitates the altcoin market to hold a little bit better than the rest of the market. The key level we are watching here is still that $1 trillion level. Again, with markets out by this orange line, the $1 trillion level is a level we've now held above for the entirety of this month. We are sitting above here the entirety of this month. If we close below 1 trillion, we will expect corrections downwards. And again, for that move to occur, we will likely need to see a negative momentum shift on the total market cap, and we will need to see Bitcoin continue downwards. Let's jump over to the Bitcoin weekly chart and then jump into Bitcoin. So from a weekly perspective, Bitcoin is still not looking amazing. We've had the negative momentum shift a couple weeks ago. If we take a look at these negative momentum shifts, we can see negative momentum shift here, negative momentum shift here, all of which triggered these downtrends to begin for Bitcoin. Now, how low the downtrend goes is not going to be determined by a negative momentum shift. All it signifies is there a change in the overall strength of the market and general direction of the market. We can also see the 62.09 represented by these vertical red lines. Historically, when we have broken through the 62.09, we see corrections towards the 50 EMA and Gaussian channel upper band, which means there is a potential that this downtrend, which has been going on for a couple of weeks now, continues into that 98 to $100,000 level, which will be the 50 EMA and Gaussian channel upper band. So in terms of momentum, the weekly momentum is still looking quite bearish and the risk of corrections are still very much on the cards. But as we know, what happens on the short term eventually develops and then is represented on the higher time frames. So the higher time frames are by nature going to be slightly leading. So although these charts look bearish here and represent lower, that doesn't mean the short-term charts can't recover to the point at which that recovery is then extended to these higher time frame charts. So we need to be aware that this isn't a confirmation we are going higher, but it is a representation of the broader trend. And what we have seen historically is when we have these exact data points trigger, we generally see that weakness continue through into these higher time frame levels of support. So taking us to the short term here and the daily chart, while we are sitting underneath this major level at 112,000, the risk of rejections from this prior support turn resistance are there. And while we are sitting underneath here, the measured move expectation for the higher time frame consolidation, which is this horizontal channel, results in moves into 100 to 98,000, which is this sell side liquidity, which is validated by the weekly momentum. As such, the 62.09 in the RSI suggests a correction towards the 50 EMA and the Gaussian channel upper band, extending that forward, assuming the current trajectory of the price action takes us to 100,000. Again, validated by the structural pattern, which is the breakdown of the current horizontal consolidation, giving us a measured move target of 98,000. Now, if we wanted to go a step further with that, we can also take a look at the daily RSI, looking at every single time we have broken through a key point, which is the 34.34 in the RSI. We have seen flash corrections in the price action. Taking a look at this instance here, a breakdown of the 34.64 in the RSI, we saw a flash correction of 18%. 18%. Moving backwards, coming over to August, we saw a breakdown of the 34.34 in the RSI. We saw a flash correction of 20%. Going back to July, we had two instances, one late June, one early July. We had a flash correction of 10% and we had a flash correction of 15%. Moving further back into 2024, we had a August breakdown of the 34.34, resulting in a flash correction of 16%. We also had one in March 2024, which resulted in a flash correction of 13%. And we can go back and back and back, going into 2023 and 2022 now, we had a flash correction of 20%. And again, you can see this is already going back now 3 years. Every single time we have lost to 33.34 on the RSI over the last 3 years, we have seen flash corrections in the price action. So, assuming that the 62.09 breakdown is leading for continuations lower, assuming that we remain underneath the range low of the horizontal consolidation, which will inevitably validate the measured move target to 98,000, we will, as a consequence, see a breakdown of 34.34, which will trigger a violent flash correction, likely to take us into 100 to 98,000 for a bottom, and then we continue upwards. That would be worst case scenario, and that is the current expectation based on the momentum on the weekly, the short-term horizontal levels, and the fact that we are in a downtrend as a result of breaking below this major multi-month uptrend. If I have to take a look at what I've been saying and my expectations, you guys would know I am bearish on Bitcoin. I have been bearish on Bitcoin since we broke this level here at 122,300. The break of structure breakdown, range high failure. This was a classic deviation setup suggesting a reversal in the trend. The trend has been pointing down ever since, and I expect that trend to continue until we do these few things. Number one, we need to see the overall downtrend break, meaning this downtrending diagonal trend line we have been in needs to break upwards. When this downtrending diagonal trend line breaks toward the upside, I will be flipping short-term bullish again. But until then, any sort of bounce is just a bounce within the downtrend. Just like this bounce, a bounce in the downtrend, this bounce, a bounce in the downtrend, they are just bounces in the current downtrend. You have to trade with the trend. So at the moment, yes, we have seen a bounce to retest resistance, but it is not enough to signify the buyers are going to push the price back to the range high into new all-time highs. At a bare minimum, we need to see this downtrend break, and we need to see, as I've said, prior lower highs. This one's sitting at 18,000 break to signify the buyers in control. Until then, expectations are lower, targets are lower, and we have got now multiple time frames from the weekly chart to the daily chart, to the short-term chart, to horizontal, to structural patterns, to potential trigger points in the RSI, all suggesting there is a risk of further downtrend. We cannot ignore that. Thank you for tuning in. Have a fantastic rest of your day. Catch you guys all in tomorrow's video. I look forward to seeing you then. Goodbye.